Good afternoon, investors, and welcome to Nifty BN. We're covering the latest earnings from Arvind Ltd, which just posted its highest ever quarterly revenue for Q2 FY26. Kicking off with the headline numbers, Arvind reported its highest ever quarterly revenue, coming in at Rs 2,371 crore. Wow, that's a solid 8.4% growth compared to the same quarter last year. The company's EBITDA performance was also strong. It grew 13% year-over-year to Rs 262 crore, and the EBITDA margin crossed the 11% mark, an improvement of 41 basis points. Now let's look at the bar chart for profit after tax. PAT saw a massive 70% jump, rising from Rs 63 crore last year to Rs 107 crore in this quarter. It's important to note the company states this significant growth was amplified by a higher deferred tax provision in the prior year's quarter. Digging into the segments, the core Textile Division posted revenue of Rs 1,803 crore, up 10.4% year-over-year, with an EBITDA margin of 10%. The Garmenting Division, well, it delivered a record-breaking performance, crossing 10.7 million pieces. This resulted in its highest ever quarterly revenue of Rs 528 crore, driven by a 17% surge in volume. The Advanced Materials or AMD Division also posted strong numbers, with revenue up 14.9% to Rs 446 crore. A key development here is the successful demerger of this business into a new wholly owned subsidiary, Arvind Advanced Materials Ltd. Operationally, this bar chart shows robust volume growth in core textiles. Denim fabric volumes grew 16% year-over-year, while woven fabric volumes saw an 8% increase. However, it wasn't all smooth sailing. The company did face tariff-related headwinds, absorbing a Rs 23 crore impact in Q2. Management expects this margin pressure to continue, guiding for a Rs 25 to 30 crore impact in the third quarter. Looking ahead, while the global trade environment remains uncertain, Arvind reports its order book is healthy. The company is guiding for 18 to 20% revenue growth in the AMD division and mid-teen volume growth for garments. To conclude, Arvind is focusing on navigating these disruptions by realigning its supply chain and expanding into non-US markets. As the chart shows, the company has revised its annual capex guidance to between Rs 400 and Rs 450 crore. Disclaimer: this update is for informational purposes only and is not a recommendation. Please do your own due diligence before making any investment decision.